All right, welcome back for another episode of Carnivore Trades. Today is Wednesday, November 23rd, 2022. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, happy Thanksgiving to all of my friends here in the U.S., everyone globally. Happy holidays as well, even if you don't celebrate it. Regardless, market's basically a nothing burger here today. So spiders up 60 basis points, Q's up 1%. They are leading the charge here to the upside. Tesla having a nice day, up 7.68%. That's at the highs of the day right now. And again, we had the Fed minutes today, and I mentioned this on Monday. I said it would probably be a nothing burger. That's basically what happened. We had one little dip here after the Fed minutes were released. The governors actually said some pretty bearish stuff. They said, they're expecting a recession over the next year. They said the Fed funds rate needs to go higher than they originally thought. So some bearish stuff, but the market doesn't care. And I said that the market likely has already made its mind up. And that's basically what happened. We got a little bit of a bear trap here kind of after the morning rally. We had to the mid-lunch session. We had a little bit of a bear trap. And, it's basically nothing, but we're at the highs of the day. Anybody who shorted this is, now underwater, and that's probably going to give us fuel for a squeeze here. I think the VIX really just got kind of oversold, kind of like on an hourly basis. If we look over on the VIX, which is actually basically at the lows now again. So it kind of got oversold here, and it is bouncing off the lows, which is noteworthy as the market does kind of drift up. So we'll see what the VIX does over the next, week or so. We did fill this gap. So again, that's probably having something to do with that little bit of a bounce there. But overall, bottom line, the market, to me, doesn't really care right now. Again, like I said, the Fed governor said a few bearish things. But again, the market's been telling us really all week long that that's probably not going to be something that the market really even cares that much about. And that's evidenced in the volume. So you can see Monday, Tuesday, Wednesday, very light volume here. And again, we're just going into kind of a bullish pattern. So again, we've been talking about this for the last 2 weeks now, literally. You had a big up move, and now you're just drifting sideways. We're looking at the futures right here. Big up move, bull flag. I mean, this is textbook 101 technical analysis here. And now we're starting to get a bid up here into the holiday with light volume. It does appear to me that we'll probably get up into that 4,100 area. We've been kind of targeting that for a while, and that is a pretty good area of resistance, especially with this pivot up here. We've got the lines drawn in a lot better there on the spiders. So again, you got the 200 moving average, down sloping trend line, and then this pivot up here. I do think we can get up and touch that pivot, honestly, especially during, Friday. I mean, who knows what's going to happen? It'll probably be another nothing burger, but we might float up just because of the light volume and just having continued momentum, the algo's buying, and so on and so forth with today's price action. Barring some type of sell-off here in the next hour, which I seriously doubt happens. There's really nothing to say that the market is concerned at all at this point. And again, like I said, it's when the market shakes off bad news like that and it climbs the wall of worry, that's telling you something. I've seen a lot of people kind of eager to short today. And to me, it's like just, if you want to absolutely dip your toe in the water in a few things, I don't have a problem with it, but you're shorting a bull flag, that's really the bottom line. It's really clean on the futures there as I showed you a minute ago. You don't want to be shorting into that. If you want to start dipping your toe in the water on a few things here and there, I think you can, but just dip your toe because this is a good pattern here and the market's telling us that it doesn't care right now. And when the market doesn't care, it can do things that, it can go higher than you think. And these rallies can go on longer than you think. So just be aware of that moving forward here. A few red flags, micro red flags, which we'll talk about in a minute, though, again, we kind of talk about it every day. But the Qs are, they're leading today, but still no higher high here. So that is a problem moving forward. I want to see the NASDAQ leading. Then getting over to the semiconductors, which we always start with in our sectors here. And again, just to reiterate yesterday, the Dow has led off the lows. That's not a good sign as well. But getting over to the semiconductors, what do we have here as well? No higher high. It's actually stalled out at the 200 moving average again for the second time. So we tested it once, we rejected it, and now we tested it again. We've backed off, and the semiconductors have not really participated in they have participated in the rally off the lows since 1 o'clock here. but they're not anywhere near the highs of the day. So that's a little bit of a red flag, and that needs to change moving forward. Doesn't mean it can't eventually make a higher high if the market does, but you don't want to see you don't want to see the semis lag. We also don't want to see the transports lagging either. And the transports actually, up until now have led. So really going back to late September, they led, and now we're way off that higher high there. So that's also a red flag. You're kind of staying inside of this red bar here. Doesn't mean it can't push up higher tomorrow or I should say Friday or even next week. But I want to see the transports and the semis leading, and that's not been the case. And the NASDAQ as well, and that has not been the case. In fact, the transports hasn't even taken out yesterday's high yet. So that is a red flag here moving forward as well. We did have some, like I mentioned Tesla earlier, that is starting to play kind of laggard bull here. They had a little bit of news this morning that reacted well, so up 7.5% on the day. This is just an oversold bounce, if you ask me. I'm not even sure that it can really get back to 200, but we'll see. It's had a nice little bounce today, and definitely have to respect it here moving forward. Apple, up 0.5% here. Microsoft has a nice bull pattern here as well. But again, outside of really these a few isolated names, these tech stocks, and we mention IGV all the time here, this is very weak. Yes, you have higher lows, but it's not participated in the bulk of the rally for the most part. IGV having a decent day today, up 1.6%, but still not even above the 1118 red bar high here, whereas, we look at the spiders, we're basically, testing this little double top here, trying to break through that. And we're basically about to break through that right now, if you ask me. But anyways, a little bit of red flags there. We mentioned biotech yesterday. That's still kind of just stuck in this little channel here, but I think it maybe can get up to that top end here if we do continue to rally. I believe the next FOMC, that's in a couple of weeks. About 3 weeks away, I think. So that's going to be interesting moving forward to see what the Fed says, because they've still maintained their hawkish stance. And again, Jerome Powell's last press conference was pretty hawkish, but the market is just like, yeah, we don't care, we're just going up. So very interested to see how that works out. But anyways, biotech here, just still kind of stuck in that range there. We talked about the transports, semis, IGV, interest rates. So TNX here, again, dipping lower, as you can see. So the 10-year yield did back off a little bit. So did the 30-year. I do think the 30-year wants to go fill this gap. May even get down to that 100 moving average there, around 3.6. But the bigger story to me right now, and to everybody it should be, is the yield curves. So 10s and 30s here, only just a three basis point spread there. 5s and 30s are now inverted again. 10-month or 3-year 10-month is now hit a new low today, so now 60, just under 60 basis points inverted. 2s and 10s new low today at 70. I think it basically got to 78 there, or very close to it. So again, these are problems moving forward. The market doesn't care about it right now. It doesn't matter how much we scream and kick and scream and complain about it, but the market's telling you it doesn't care right now. In the future, it will matter. I'd probably sooner rather than later, I would think. But for right now, the market's just in this mode where it thinks the Fed's just going to pivot. And ironically, at this point, I think the Fed pivot will probably be the sell signal. It'll probably be a buy the rumor, sell the news type event, if you ask me, at this point. But again, to go back to the 2-year, this is EB, but the 2-year is actually set 4.5 right now. Fed funds rate is basically at 3.85, 4%, if that's kind of where the target range is. So another 50 basis point hike would essentially get you to where the Fed needs to be. And you could make a case that the Fed could pivot after that, but that doesn't mean that we're out of the woods. So just go back and look at any bear market when the Fed started cutting rates, and it was not necessarily the low. But anyways, 2-year here is getting a micro bid, but this is still a weak chart pattern. This could easily still make another low. So be aware of that. If that happens, things are going to get interesting very quickly. And I mean, by interesting, I mean like volatile. So anyways, rates, let's get over to home builders. XHB, again, nice pattern here. That's starting to move up. I've been talking about that. I do own Nail, which is 3 times long in the home builders right now. So just full disclosure there. I do own that. That is up nicely. ITB also up 1.2%. Again, nice bullish inside bar. That's starting to move up here. Again, I've been telling you guys that can go up to the 65 handle. That is really kind of like the max move that I see for it right now. But again, home builders in decent shape, and you know, it's had a nice reclaim the 200 moving average, and it's holding up well. So we'll give it the benefit of the doubt. VNQ, same kind of thing, although this is a little bit on the weaker side today. A little bit of a red flag that it can't participate in this light volume rally here. But again, still an inside bar pattern, and it's holding up okay. So we'll just leave it at that for now. XLF, same thing. XLF is strong, basically at double top. So this is kind of leading the market right now. Again, you see the spiders at the highs of the day, XLS with the highs of the day. I think this can get up to 37 here in the near term. The big level is at 38, though. I don't know if it necessarily gets up there, but those are the levels that I've got worked out right now. Broker dealers, same kind of thing, although this is starting to show a little bit of laggardship as well. So kind of like the transports, semis, this was leading on the way up really since like late September. And now it's starting to, you know, it's way off the recent highs. So it's still going up with the market, but it's, you know, you have a high, a lower high, whereas the spiders, you know, high, yeah, there it is, high, high, higher high. And then XLF, just the general XLF, is also basically at a high and a higher high, or at least an equal high. So just be aware of that moving forward. Crude here, so down another 4% on the day. A little bit of weakness here again. So it's almost like the equity market's just not paying attention. It is. It's actually the equity market's not paying attention to the bond market. It's also not paying attention to crude. And if we just look kind of like intraday here, crude's just been weak all day long. And again, it seems that crude is starting to respect the possibility of a slowdown. Bonds are definitely respecting the possibility of a slowdown, but equities are behind. So, and that's typical. Usually that's how it works. Bonds are ahead. So at this point, equities don't care, but they will eventually. And again, we'll just leave it at that for now. XLE also showing a little bit of weakness. So again, this has been the leader, right? This has been the leader since late September. And now you have a lower high potentially on the daily. So again, seeing a little bit of rotation here, a little bit of changing character. XOP there, OIH, same thing, kind of a little long-legged doji here, down 2.5% in an up market. So, and then the market's pushing at the highs of the day here in energy. Energy just looks tired to me, honestly. So that's kind of what I'm looking at here. And again, there's still a big divergence. Look at the OIH, XLE, XOP at 52-week highs, with crude, you know, not quite 52-week lows, but, you know, year-to-date lows for sure. So just be aware of that divergence here. Nat gas, I think, is a different story. Nice move there. Outside day, up 8% on the day. Be watching this one. It got up to 750. I told you guys a while ago, I told you when it bottomed, it was probably going to go up to 750. Finally got up there. I really just hate that outlier candle. Otherwise, I would still be in it myself. But, you know, nat gas is a tricky one. I do think this can be bought on dips, but I got to see a little bit more here. It's a tough pattern right now. You could make a case it's got an inverse there, little inverse head and shoulder. So left shoulder, head, right shoulder. We'll see what it does Friday. If it, I know this is up because of cold weather right now. I mean, like, it's the winter time. Of course, there's cold weather. That's the only thing, you know, that's the only thing that's keeping me a little bit skeptical on the up move here. It does feel like a little pumpy, but for right now, it's holding up okay. We'll see what it does here, and we'll see what kind of pattern it gives us. But I am not in nat gas at the moment. Moving on to the dollar index, down in an up market. Again, dollar down, market's up. That's all the market's really looking at right now, and that's what we need to respect. I do think it gets down to that 104 area. Gold having a decent day. You see the GLD popping on the Fed minutes, just like everything else. Look at that perfect 100 moving average test. What I tell you guys for last 4 or 5 days, I said 1720, 1725. Low of the day, 1719, and nice little bid there with a tail and an outside day for gold. So gold getting a nice bid off of that support level. And silver here as well. I said 20 moving average would probably be your dip buy area. Getting a nice bid. It's above the 200 again. So I like silver here again for a move up to the 23 handle. It looks good to me on the charts. And platinum getting a nice bid. You know, a little bit of a laggard here. It was pretty overbought, so we'll respect that for now. But it is holding that 20 moving average for now. So we'll just leave it at that. And then copper here also getting a little bit of a relief bounce, but much weaker than everything else. If we take a look here on the weekly, He basically had an engulfing reversal there last week, and it's trying to hold the 20-week moving average for now, but again, definitely on the softer side. Bitcoin here, so it did reclaim the 16.5 area, and it's basically trying to hold on to this green trend line, which I think goes all the way back to 2020. And again, it's weak. It's got an inside bar here. You got a bid. The market's really surging right now, the stock market, and you're not seeing anything out of Bitcoin or Ether or really, Litecoin had a nice bid here. That's, for a little bit of an outlier. Solana as well, but that is really just kind of an oversold bounce. So not a really, nothing too robust here for crypto. Again, nothing's really changed. Still have weakness in this. And again, there's no shortage of reasons why. Anyways, let's flip back over here to the spiders. Again, I'm doing this video a little early because it is holiday weekend. Again, it doesn't appear that there's anything wrong with the market currently. It does look like they'll at least keep us elevated into the close. Market looks healthy to me, at least in the near term. There's problems under the hood that will become a problem later on in the year, possibly closer to that FOMC. But again, we'll see. We'll take it one day at a time. We'll see every day as it unfolds. Anyways, guys, I'm going to wrap it up here. You guys have a great holiday. Come find me on carnivoretrades.com. I'll talk to you guys all on Friday.